Hey traders, this is Blake Morrow with Traders Summit. And with me once again, I have Mr. Gareth Soloway from In the Money Stocks founder. How are you? Good to see you.
I'm so well. Thank you, Blake. Loving the volatility we're seeing in this market.
Isn't it awesome? We get some two-way price action. It's about time.
Yeah.
That's what traders at Traders Summit really want, and we're getting it. So it's great. So I have to say, is it too late in the year already to say Happy New Year? Because since we hadn't talked since December, right?
We could say it in December of this year. Happy New Year.
Happy New Year. All right. Well, anyway, since the last time we spoke, I want to say you had a great call on cryptos. We had this long discussion about cryptos, the price action of Bitcoin kind of being like Amazon. You looked for a correction, and I mean, I have to say, on the financial Twitter sphere, a lot of people had been bullish crypto. You were kind of going the other way, thinking we could correct. Now, I know you were looking for 20,000. I'm not sure if that's what you're currently still looking for, but we have seen a correction. And it was a sizable correction too. We are stabilizing, but the bounces are kind of meager. So what do you think about Bitcoin here? And why don't you show us what way you're looking at it now?
Yeah, absolutely. So we'll take a look at the chart here. And this is where this stuff gets really cool for me. I mean, as a trader, I'm just always looking at the charts, seeing what they show us. So my shorter term target we hit, right? So downside, first of all, let's preface this by saying that eventually we will go down to 20,000 or even sub 20,000 per what I've said in the past. But that doesn't mean we go in a straight line, right? I mean, there's always going to be bounces, which is what traders like myself just absolutely love. So what you can see here is that this was our high of 69,000. The collapse took us to 33,000. Now, what's so cool about this chart is that if you take the high here from April at 65,000 connected to the high at 69, the lows are perfectly parallel lined up. So what that did was it gave me a good basis to call a bounce here in Bitcoin off the 33,000 level. And what you can see here is we also have this downsloping trend line. If you connect the high of 69,000 to this high right here and to this high, and we came into that, we pulled back a little and broke out. So I went long in Bitcoin in this range. I've actually taken half of my position off at this point because I do think that the energy of Bitcoin is running out. Now, just to go over one reason why Bitcoin turned around from the highs yesterday, and it's so funny because I saw the bullish sentiment just starting to erupt yesterday, just as we were around that 45,000 level. But the problem is you always have to look at the charts. Never go by the pumping crazy hype on Twitter or anywhere else, and look at this beautiful trend line. So if you take the low here connected to the low here, it intersects right here and this high, and look at where Bitcoin stopped yesterday, right on that line. So you are seeing a little bit of a pullback here. I'm in the camp that there's a small chance we could maybe go up to the dotted line around 52,000. But if you look at the stock market's been having a bounce. Technology is off the lows. The NASDAQ 100 is. It makes sense that Bitcoin, which follows the technology stocks, is getting a bounce here. My bigger concern is what happens when we start to see that bigger rollover in tech, that next leg down in technology. And again, that's where I think you start to head back lower. And just to understand, charts are about probabilities, right? When you look at a chart, it's telling you the probable outcome, doesn't guarantee anything. But for those of you that are curious, when you see a breakout of this line here with this line under here, which is a wedge pattern, the general way it works out is you go up, maybe you go a little bit higher, but inevitably you check back to that line. And this line, if you extend it down a few more months, is going to go down into the 20,000 range. And my worry is that at some point when we check back down to that line, it's going to be around 20 or even sub 20,000. And that's what probabilities tell us. You get these short-term breakouts, and then you have to go back to that downsloping line to retest it at some point. So again, great move up, great bounce here in the near term, but I wouldn't get excited. I wouldn't buy into the fact that we're going all back to all-time highs. I still think we're in a crypto bear market.
Gareth, as a trader, we tend to look at price action too. And, the bounce here has been pretty shallow. From a Fibonacci standpoint, we haven't even reached the 38% retracement. Is that telling you anything specific about Bitcoin right now?
Yeah, I mean, I think it certainly tells you that there's still a lot of big players that are unloading. And I think that's one of the things that I saw at 69,000 is that it kept on trying to break 65 and hold above 65 from the April high. And there was so much hype. The Bitcoin ETF was launching at that time. And I mean, I was at a trader summit in Dubai, and I mean, the hype was just, you could feel it in the air. And the question is, well, why wasn't Bitcoin ripping up with that much hype? And the answer is, well, there had to be bigger players that were unloading into that. And I think that same thing is going on here, is that you still have bigger players unloading into it, understanding the metrics of how Bitcoin works. The price of Bitcoin, there's on-chain analysis. That's great longer term, just like fundamental analysis for stocks. But in the short term, it's all about deleveraging, right? And the Fed is choreographing this dance. They're saying, hey, we're going to raise interest rates. We're going to lower our balance sheet. That's making liquidity get sucked back instead of going out into the market. That's making technology stocks come in and will ultimately make crypto come in more.
All right. Well, you talked about technology stocks, but I really want to ask you real fast before you go into anything else. I want to ask you about the S&P, because when we talked in December, you were expecting a decline in the S&P, and we saw a pretty big correction in S&P standards, almost 10% and intraday, below that. But how do you feel about the markets now? I mean, we had a nice correction. We're consolidating. Do you get short here, or are you getting long?
So definitely towards the lower end, I covered my S&P shorts, mainly because, again, I was anticipating a bounce. We've gotten that bounce. But one of the things we should all remember, and investors, again, sometimes investors are very short-term view, and it's important to look at the big picture, right? So if you look at this S&P chart, this SPY chart, this was your long-term trend of the S&P, right? It was just it was a great uptrend. You could see it continuing up from 2012, 13, 14, 15, 16, all the way up. But then you had COVID, right? Here's your COVID dip, which triggered the Fed to come in with unprecedented money printing. And the government did too. I mean, the government sent checks out to Americans multiple times. There was so much money going into the system. And what did that do? It basically put the market on steroids, right? I mean, like, legitimately look at the move up on steroids. Now, The Fed is telling you, hey, we got to pull this back because of inflation. And the government certainly doesn't look like it's going to be sending more checks. So what does that mean? It means likely that you still have lower to go. In fact, you could argue that you retrace to a good shorting point here, and you should fall back down into this longer term channel. And this longer term channel is if the economy doesn't go into recession. So if we go back to 1 to 2% GDP growth, I think that's where the market ends up. If we have a recession, that's where I would worry that we head lower potentially to the downside. But I think in the very least, it just makes a whole lot of sense that the markets could be going lower as we're seeing this liquidity get taken out of the market. Essentially, the steroids being removed, the market has to go back to its longer term trend.
Gareth, we as you and I, we've been in the markets for quite some time. And I have to say, the punch bowl's been in front of our mouths for a good decade and more. So maybe this is the Fed pulling it away a little bit. What else do you have on your radar? You probably have some other things that's really, you talk technology, you're talking crypto. So what else are you seeing out there?
So before we get into that, I'd love to just mention about the Federal Reserve. So my projections this year are as follows. And you're right, the punch bowl has been there for so long that the markets have become very accustomed to it. Yeah. I think it's going to be hard for the Fed to really take it away fully. So I think the Fed is they're banging their chest right now saying, reduce their balance sheet, raise interest rates maybe 4 times this year. But my guess is that we've already seen a correction like we've seen in the markets. If the Fed really does raise interest rates and remains hawkish, you're going to get a bigger slowdown in the stock market, which will be downside, a slowdown in the economy. And my guess is the Fed will have to back off maybe in late 2022 from their aggressive kind of hiking of rates. And what that's going to be interesting to see is, where is inflation at that point? And then also, where's the stock market at that point? And does the stock market then get back into that happy mode of further upside? So very interesting to kind of just think about these possibilities in the future. Now, going to stocks. So there are places, even though I'm generally bearish on the equity markets, the NASDAQ 100, and we can bring up the NASDAQ 100, which is just a really cool chart too. But overall, you can see that the NASDAQ corrected down to exactly a parallel line with the low of COVID. and this high line right here. So it makes sense why we bounced right there. I still think we're going lower. I still think, a lot of stocks have just had too much fluff in them, mainly the major trillion-dollar names, right? The Microsofts, the Apples, and so forth. They've just carried this market. Now, there are places to invest, right? So I've been a big fan recently of like a stock like Alibaba, which has already been clobbered down from 300 and change dollars, having a nice day today, up about 5%. But this longer term trend line is definitely on my radar for a potential breakout. And what I've really noticed is, and we can go to the EWZ, which it's rallied a lot recently, but if you zoom out on the EWZ chart, you can see, it's since 2014, it basically hasn't gone anywhere. And this is the Brazilian ETF. My thesis here for why I'm interested in foreign stocks is because the US, because of the Federal Reserve and the economy being the strongest in the world, has drawn massive inflows of capital globally and domestically into our stock markets. But now the Fed is starting to turn. Now inflation is becoming an issue. So it's not as attractive for international investors to be here. So what I think you're going to see is money flow beginning to go to these foreign governments that still have that ability. Like China can print whatever they want in terms of money. South America can do that. They still have good growth there. And I think that's where you want to kind of start to look for investments.
It's interesting that you say that. As somebody like myself who focus predominantly on currencies, you can see that really work itself out in the peso, the rand. Those currencies are actually outperforming even in some risk, we call it risk off environment. You see emerging market currencies not as weak as they typically would be in those types of environments. And when looking at your ETF, even the Brazilian ETF here, that makes a lot of sense as well.
Yeah. And again, looking at what the Fed's doing here is I think inflation will come back in a little bit, but there's no way it's going back to, 2%. And this is going to be a dance that the Fed is going to be in a lot of trouble with, is because, as the stock markets decline, as they tighten, then it's going to increase unemployment, right? So you have the wealth effect, you could argue, has been one of the reasons why the economy has stayed so strong, is because people have money because their 401ks are up 50% in the last year or whatever it may be. But if you draw down the stock market by 30 or 40%, all of a sudden consumers start spending less, then companies have to lay off employees. And as soon as that happens, then the dual mandate comes into play. And the Fed is going to have to look, right? They have inflation here and they have high unemployment here. Which one do they tackle? Because if both are high, they're really in a conundrum. And my guess is they'll tackle the worst one, which probably at that point will be unemployment, which means, again, coming back and printing more money.
Yeah, and supporting overall equity markets. Well, Gareth, I love the way you think, and I love the way you think as a trader. We are getting volatility now, and that's awesome. So if I'm at home and I'm watching what you're doing, and I want to follow you more closely, how do I do that?
Best place is on Twitter. It's free, right? So at Gareth Soloway, just at my name, you can find me there and follow me. I post charts almost every day and kind of little snippets of information and kind of insight. And then if you're more interested in getting real trades that I'm taking live, then you can join inthemoneystocks.com, my service, Verified Investing Alerts. I also recently launched a crypto trading service on verifiedinvestingcrypto.com. So lots of places to find me on the internet. I love trading. It's my passion. Been doing it forever, it seems, and hopefully for a long time to come.
Awesome, Gareth. Well, if you like what you hear here on Trader Summit and you like what Gareth had to say, make sure you give him a thumbs up, smash that like button. Also subscribe to the channel down below so you don't miss any of this content and other content that we do provide at Trader Summit. Gareth, thank you so much for being here. And I know it's only been maybe about 6 weeks. I got to have you on way before that next time.
Heck yeah, I'd love to be on again soon. And thank you, Blake, for having me.
All right, Gareth, have a great one. And thanks for joining us. Hey traders, Blake Morrow here. Thanks for stopping by our YouTube channel. Don't forget to like, share, and subscribe to our channel. Also click the bell notifications so you do not miss any of our market-related trading analysis from some of the leading industry experts. Thanks for stopping by. We'll see you in the next video.